All right, let's see if we're doing this right this time. My name is Kevin Matthews the second. I'm a two-time author, one-time bestseller, top 100 financial advisor. I am trying to hit the share button as I often encourage you guys to do. So I'm checking on my phone. I am hitting the share button. You guys can see the screen now, so that's perfect. I don't know why it didn't work the first time. So whatever. So I'm gonna go ahead and hit the share button. I'm gonna hit that. Apparently, I'm starting a watch party. That's pretty cool. So feel free to do the same. All right. So the stimulus check. So again, as I mentioned earlier, I'm not a stimulus check expert, so I'm not here to tell you how much you're going to get, why you got one, why you didn't get one. I'm not going into that. What we are going to talk about is if you got one, here are some ideas. If you did not get one, here are some ideas. If you have, let's say, $1,200 to invest or move yourself forward, feel free to ask questions in the comment section. I'll be monitoring those. Again, I'm not an expert on to tell you. Don't ask me how much you get when you're getting it that I'm not equipped to cover. I am equipped to cover if you got one, here's what's going to happen, or here's what you could do. So most people, if you're single and you qualified, you can get up to 1,200. Married couples can get up to 2,400. They will be direct deposited if you filed your taxes. If you for 2019 and 2018, if you didn't, you might want to do that, and you're also behind. So there's that. Um, should you get it, we're going to discuss some ideas on what you could do, what may be a good idea for you, and we're going to kind of rank those. So now that you guys can see the screen, appreciate it. Thank you guys for sharing. Click the share button. So I'm going to go here. I'm going to pull up the whiteboard and give you some ideas. So number one, you want to boost your savings if you don't have a decent savings. When I say decent savings, I prefer 3 months of your rent at minimum. 3 months rent, mortgage, whatever it is. So I'm just going to put 3 months at minimum. Why do I say that? We know for a fact that I think it's upward of 50% of Americans don't have $500 to cover for an emergency. So it might be smart if you get $1,200 and you're still working and everything's fine. Take a big chunk of that. Take the whole thing, take half of it, stick it in a savings account, and leave it alone. What are some good savings accounts? I like Ally because it's out of sight, out of mind. They pay a higher rate. Is that going to like make you a millionaire? No, but it is going to give you a safe cushion. If you do not have a cushion and you have no savings, you have no business investing yet because investing takes time and it is not guaranteed. I have some amazing stock ideas. We'll talk about those. But if you need to pull out of it next week, if you need to pull out of it, a year from now or 6 months from now, that investment is not going to grow. So this is your number one priority. If you do not have and can't cover 2, 3, 4 months rent or more, you might want to put the vast majority of the money there. Again, unemployment has shot up like crazy. No one knows what's going to happen next. If you're an essential employee, you're probably fine, and thank you for your service. If you're not, you don't know not the time nor the hour when it could be you that's laid off for a number of reasons. You may be in between jobs and your job offer is frozen and you don't know how long that's going to last. So if you get it, and you don't have certainty around what you're doing and you don't already have a place to park your money and allow it to grow, number one, boost your cash savings. That is only going to benefit you down the line. So again, my favorite place is Ally. You can also open a Goldman Sachs account if you're down with them. They pay a higher rate as well. American Express Bank is a decent place too. All of these are online banks. All of them pay a bit better than the traditional banks that you may go to every day. If you're okay with online banks, I like them a lot. They can pay you a bit more. That's option number one. Option number two, and this is somewhat of an investment, you can do certificate of deposits. I know my handwriting is terrible on the screen. Y'all have to deal with it. Y'all have to deal with whatever bad spelling comes out of this pen. Okay, deal with it. Deposit. Or you can just call it a CD, which is what most people call it. Now, a CD, let me just go over. Okay, so a CD it falls in between. Some people, it is technically an investment. Essentially, what it is you put in $300, $400, $500 in a bank. It is FDIC insured. as long as you don't have more than 250,000 in it, you're going to get your money back, guaranteed by the federal government. So you're good there. You're not going to lose any money. They're going to pay you 1%, maybe 1.5%. Rates do change at the end of the term. So if you're thinking, I have this money, I don't want to lose it, and I don't need it. So if I need to lock up money for a specific period, for a specific amount of time, I can get a little bit extra than what I might get in a savings account, but I can't touch it. For example, you may get a 6-month CD. Let's say you put 1,000 in there, they're going to pay you 1%. You get that 1% interest at the end of 6 months, and then you can roll it over or do whatever it is you want to do after that. So if for example, let's say if you are using it for holiday shopping, let's say you know Christmas is coming now, and if you're okay and you're not, your job and your income isn't hurt by this, you can say, look, I want to save this for holiday expenses now. I know Christmas is coming. I'm gonna put it in a 6-month CD, and 6 months from now in October, I can access the money. I'm gonna get a little bit, maybe it's $10 extra, right? And I'm gonna go and invest it from there, or I'm gonna go and buy things from there. That's one way to set yourself up for the future. You're not gonna lose any money. It's guaranteed. It ain't going nowhere. It's a really easy thing for you to do. Where do you get CDs? All the banks I had brought up earlier. You can also get a CD from the bank that you're currently using. If it's not just available at the top tab to say, hey, savings, CD, or certificate of deposit, call up. They'll gladly offer you a CD and give you the rates. Those CDs they're going to pay different. Those rates are going to change. Whatever you get, you're going to get locked into. So that's okay. The sooner you do it, the better off you're going to be. Again, 3 months, 6 months, a year, whatever you are personally comfortable with. Usually, the longer the term, the more you get paid. So 2 years usually pays better than 6 months. 5 years pays a whole lot better, supposed to anyway, than a 1 year. How long you want to lock up your money, that's up to you. The only risk there, well, two risks. One, if you need the money before then, you could pay a penalty by breaking the CD. Some banks do have a penalty, others just forfeit the interest. That's up to the bank. The other thing is, what if rates go higher? So you get locked in for 6 months at 1%, a new CD comes out and now 6 months for 2%. That's not going to happen. It's not likely to happen because rates are falling down to zero. So that's probably unlikely. But again, it's just a way to protect your money. It's going to guarantee you the money. It's also going to keep you away from accessing the money for 6 months or however long. And again, it's guaranteed. So that's two ways to kind of protect your money. The other way is you could invest it. So number 3, so you could invest the money. So you can invest it in the stock market. And I don't think that you should, if you're a new investor, I don't think you should sit here and say, hey, put it in and I'm going to grow, I got 1,200. I'm trying to grow it to like 2,000 by the end of the year. Is it possible? Yeah. Is it likely? I don't know. Depends on what you do, right? It depends on how the economy ends up, which we don't actually know. We have tons of ideas and predictions on where we think the market will go. There is no guarantee for where it does go. So you have options there. We will find out. But again, that is an option for you. We talked about this. You can check yesterday's video. You can do this at Ally. You can do it at Cash App. You can do it at a bunch of places. And I'll talk about some ideas as to what may make sense to invest in. But again, this is more long term. I do not think that this is an area where you are going to get a huge benefit overnight. I will, however, also tell you this is, let's say if you get 1,200, I don't think it makes sense to drop it all in at once. I would do 100 per month into the exact same investments. So for example, if I'm buying SPY, which is an index 500 ETF, which owns the entire stock market. So instead of me trying to pick, the right stocks all the time, I own 500 largest stocks. I'm going to be okay. So every month, if it's April, put in 100. If it's, June, July, August, Put in 100, put in 100, put in 100. And then 1 year from now, you would have put in the entire 1,200, and then you start the process all over, and you're going to see your money grow a bit smoother that way. So that's how I would do it if I were investing that money. Now, here are some other ideas, other ways and places you can invest that money. I'm also going to check the comments. If you have any questions, feel free to ask those as well. All right, so here's some ideas. So what I did was take $1,200 and say 10 years ago, if you invested $1,200, where would you be today? This does not guarantee that you will be there in 2030. But like I've said on this channel, like I've said, I say channel. I mean, I guess it is a channel. Like I've said here before, I've said it on Instagram, I've said it on webinars. Those who are going to have wealth in 2030 are the ones who are building it now in 2020, even when things are not fun in terms of the stock market. So if you put in $1,200 and left it alone, you would have in Netflix, had you done it in Netflix, and these are some of the stocks that were on my watch list, which you want to be watching the watch list. How do you do that? Click the link above. We talk about that. We teach in a free class next Wednesday as well. All right, so now, going back to the watch list. So Netflix, you put in $1,200 in Netflix back in 2010 and you left it alone and you didn't touch it, you'd have $36,000 today. That's a hell of a return for one stimulus check, and you left it alone for a decade. You are not going to easily make $1,200 by investing one time and walking away. You could do that, or that will Netflix do it again for the next 20 years or next 10 years? There's no guarantee there. I'm not here to promise you that. However, if it did half of that, wouldn't you be happy? Right? If it did a fourth of that, would you be happy? So, if you only get 18,000, that's half. I'm gonna still take that. If I only get 9,000, which is half of that, I would still take that, because you could do $1,200 a year and still not hit that number. So that's what you could do in Netflix. Now, not every stock is going to be Netflix. Some things are a little more tame. If you had put the same $1,200 back in 2010 in the Walmart, that's $3,000. That's still more than double over 10 years. That's not bad. You put in $1,200, now you got $3,000, and all you did was do it one time. You didn't do it every single year. You put in $1,200 one time, but it's over a year or just on one day. Again, I prefer spreading it out. That's $3,000. That's not bad. Another stock that was on my watch list, if you did NVIDIA, which is they do like the gaming chips and all that, you put $1,200 there, that's $18,000 over the past 10 years. All these stocks project to look good at least over the next year. I can't tell you what they're going to do over the next 10 years. I think it is safe to assume they're going to be okay. But again, take it for what it's worth. Microsoft, Microsoft is solid. They've been solid for a while. You put in $1,200 in 2010, you got $7,000 today, even despite Rona and all these other things that have occurred. So these are just ideas. And then lastly, this is an index fund. So I'm not going to take on the risk that I have here, but I still would have doubled my money by putting my money in an index fund. So again, each one of these have been really solid choices for you. So I would suggest that you go and research and see what fits for you. I always think that the index funds are great for investors. It's a lot less risk comparative to what you have, but less risk, less reward, as you see here. You would have not made as much, but you wouldn't have taken on as much risk. Same thing with the savings account. You might make $1, but you have no risk there in terms of, you have a lot less risk. I'm not going to say no risk inside of those. So how would you break this down? I'll show you this. You can do multiple things. You don't have to only put your money in one thing. So depending on where you are, these numbers are going to look a lot different for you. So I'll pause right here before we get to it. Check to see if we have any questions. I don't see any questions on my phone. Make sure you hit the share button, because I know people are talking about these checks. I know people are trying to figure out what to do. And I know a year from now, there's going to be some people that invested the $1,200 and lost it all because they put their money in an airline stock or a weed stock, and it didn't pan out. So I'm telling you right now, on April 15, 2020, these were the suggestions I made, as well as the savings account, as well as the CD. So when you come back a year from now, and this pops up in your memories, I'm gonna be like, you could have had some money and you didn't. So I'm telling you right now, whether you use it, you can put it in a CD and save it for the holidays this year. You can check out one of your stocks. You get options. Okay, I'm just throw that out there. I'm gonna just leave it alone. All right. No questions, but I am here. Okay, perfect. Thank you. Thank you for that. Because I could have been on mute the whole time and ain't nobody say nothing. So I appreciate that. So, all right, so going back, here's a strategy that you could use depending on where you are. How much you want to have in cash, totally up to you. It really depends on your situation. So we've talked about fractional shares before. If you don't know what fractional shares are, check the channel. We've covered it. Essentially, instead of spending $2,000 for one share of Amazon, I can spend $20 and get 1%. All right. So what I could do is make sure this is black. So let's say I have $1,200. $1,200 is my check. I could do this. I could say, look, I have some in savings. Let me put some more in savings. So I could say, I'm going to take $300. I'll put that in my savings. Okay, putting that in my savings account. I have some. I need to get a bit more. I can also say, Christmas is coming up because it's coming up every year. I'm going to put some money in my CD. Okay, that's going to give me, and I'm making this number up, maybe that's going to make me 1%. That's a guaranteed 1%. I know I am going to get that. Then I could say, and that leaves me with $600 left. Yep. So I got $600. What I could do is say, I'm going to split my $600 between some stocks. So I can say, well, let me put a little bit in Netflix. Let me put some in the S&P 500, which I mentioned earlier. And let me put some in NVIDIA. And what was another one? Microsoft. And these are just ideas. I'm not telling you to invest in these specifically because your goals are going to be different. And so it's 1, 2, 3, 4. I'm not going to divide this evenly. Let's just say I do $50 because I'm doing fractional shares. I don't have to invest in the whole thing. Every month, $50, $50. Let's see. 50 per month. All right, so that's $200. So this is going to last me 3 months. So, and there you go. You have all your bases covered. You're investing consistently. You've got $50 in those 4 things. Now you can play with the percentages. It doesn't have to be $50, whatever it is you want to do. But I've got my savings covered. I've got some longer term savings just for the next 6 months or however long you want to have it. And I'm investing my money. You don't have to just pick one. You don't have to say, I'm putting it all in the stock market. You don't have to say, I'm putting it all in the CD. Be flexible. Do what works for you. If you're somebody who you don't need the money now and you have a year to invest, you have 5 years or even longer to start investing, it might for you make sense to invest a bit of it. You don't have to invest it all, especially if you're new. Don't invest it all, and you don't have to do that one time. We're just putting $50 a month in each of these. We come back the next month, put $50 into each of them. I got my savings set. I put a little in my savings, a little in my CDs. I got Christmas taken care of now. I got a little bit more in my emergency fund, and I'm investing. And you've gotten pretty much all of your bases covered for just $1,200. And while this is growing for you, whether you have another $100, maybe you get another $1,200 from whatever source, right? You can continuously build on something, but you've got your base covered, and that's the important thing. So this is just an idea that you can use your stimulus check for. Share with your friends, share with your family. In a year, you're going to thank me that you had these things covered now, assuming that, hopefully you don't run into a situation where you lose your income, because all this changes, right? So in this situation I'm showing you here, you've already got your savings. If you don't have a savings at all and you have no cushion, I think it makes more sense to say, I'm putting this entire thing in savings and I'm holding on to it because I might need this if something happens. If that's not you and you already got 6 months of savings, 3 months of savings, then maybe you can be a little more aggressive and do different things. So I'm going to turn to the questions real quick. Based off your personal experience, which app for beginners is best for stocks and trading, including monthly fees? Acorns, Robinhood, Pennywise, Stash, and Webull. So of the ones that you listed, I think Webull is going to be the best if you are looking for stocks and trading. Keyword trading. So investing, which is what I'm showing you here, is I'm investing in these. I'm gonna hold these for quite some time. Trading is, I'm gonna be in and out of these stocks, back and forth, back and forth, back and forth. Is that better for you? Depends on what you're doing. Of the ones you listed, again, I think Webull is the best. Robinhood has some issues, and they have a waiting list for fractional shares. That I was just told that on Instagram the other day. Webull, to my knowledge, does not. You can do fractional shares now. So again, based on the list you gave me, I think Webull is the best. I did do a video live stream just like this yesterday on the apps that I like and the pros and the cons. Have you used Ellevest? I have not. I have some good friends that love Ellevest. I have heard very, very good things about Ellevest. So I think it is more woman focused. So clearly, I haven't been there, but I've heard some amazing things about it. And if my friends recommend it, then it's probably a good idea. Somebody said this is good. Thank you. I appreciate that. Any other questions? I'm gonna hang on here for another 2 minutes. Y'all got questions? I got answers. Hopefully, let me know. And again, these are just some ideas as to what you could do with the $1,200 stimulus check. So again, number one, boost your savings. Pay yourself first. Now, notice, and I didn't include this. There's a case to be made that you could pay off some debt with it. Totally fine with that. I'm of the mindset, pay yourself first. There are a lot of programs that you see where you can defer under certain circumstances. You need to see if that makes sense for you. You can always restructure and refinance because interest rates are going low. I'm really for paying you first. That's what I'm most concerned about. I'm not about paying your credit card. You got to pay it. So don't get me wrong. You do need to pay that and cut it down as much as you can. However, pay yourself first. I believe in that. So boost your savings, consider a CD, consider investing, and then whatever else you got left over, then you can pay them. I'm just all about paying you first. So, I hate debt. I hate student loans. I hate credit card debt. I do not carry a balance at all. So there is a case to be made that you could pay off credit card debt. You could do that too. But I tend to lean towards paying you first before paying Chase Bank or whatever credit card you got. It's a personal decision. You take this advice and see where it fits for you. All right. Okay, so checking questions and comments. I'm a beginner and learning, taking your courses and watching your lives. Yay! Planning to start investing once I grasp the concepts. Is there a downside of me waiting? Should I learn now, even though I'm still trying to learn? There can be a downside in that I'll put it like this. So if you take 6 years to learn, that's 6 years of growth you could have had. Now, is it gonna take you 6 years? Probably not. I think it is better for you to learn and avoid terrible decisions than jumping in and trying to take advantage of what's going on in the market today. So, if you invested money back in March, you'd be up 20% right now. That's great. However, if you didn't take the time to learn, didn't take the time to take my course or anyone else's course, then you could have bought Carnival Cruise and been down 70%. So in a reasonable amount of time, I think it is to learn and protect yourself first. And I think for someone who's not 19, because I started when I was 19, it took me a whole year to get it, and then even longer to really, really get it. I think you can learn in a month. I think you can learn in a month and a half. I think that is worth more than trying to jump in the right price. And if you are investing for years to come, because you didn't invest in 2020 on this particular month, I think you're going to be fine. It's really about the perspective. So if you learn now, take a month, take 2 months, take 6 months if you have to. But if you have 20 years ahead of you, 30 years of investing, you're going to be fine. What do you say about directed account from 401k. Tell me a little bit more about that. Do you think the stock market has hit bottom yet? I don't know. I don't know. It's hard to call these things. There's there's evidence to suggest that the answer is no because unemployment keeps going up. We haven't hit the peak. We haven't like plateaued necessarily yet. So logically, you would say no. This is terrible. We haven't hit the bottom yet. However, I think it was last week. It was like yeah, Good Friday was last week. So last week we had the best week in the stock market in 46 years. The stock market has been up about 20% since mid March, like March 16th, somewhere in there. We're up 20%. So I don't know. I don't know if we've hit the bottom. And personally, I don't care. It doesn't matter because for me, I'm a long term investor anyway. And I'm not putting all my money, I'm not trying to time things and put all my money in at once. I'm doing it every single year or every single month. So it don't matter if we hit the bottom because I'm gonna put in $100 in Netflix anyway. It doesn't matter if we've hit the top. I'm putting $100 in Netflix anyway, and that's just an example. So I'm investing my money on a systematic basis, and it does not matter whether we're at the top, the bottom, the middle, or anywhere in between. 1,000 is it wise to put it all in Walmart, even though I wouldn't be able to get a lot of shares? Would I be able to see gains? You would be able to see gains. It doesn't matter how much you put in, you're going to see gains. So, for example, if you put in, and I'm just going to make this example. So, first off, for Walmart specifically, to see if you need to do your research, see if Walmart is for you. Walmart may or may not be for you based on whatever your expectations are. I can't tell you what expectations are. So if I put in, and let's say Walmart goes up 10%, I really shouldn't do math on this because if I mess up, I look stupid. You're going to make $10. Right. Now, if you put in just $10, which you could do with fractional shares, the same 10% because this is going to happen regardless. However, what you make is going to be different. So you're only going to make $1. It's 10%. So if you put in 1,000 and you make 10%, you're going to make 100. Is that significant? That depends on how much money you have and how much you've invested in the past. I don't know. But again, the first question is Walmart going to fit for you specifically? Does it fit for me? Maybe, maybe not. Does it fit for my son? Maybe, maybe not. I would need to go back and let's scroll back here. Walmart was in second place or second to last. I could have taken on, let's say $1,000 is all I have and it's all I'm ever going to invest. Do I want to take the risk to get this extra $200? Or can I invest in 500 companies, use everything on this list, and take less, but really reduce my risk? That's a question that you have to answer. All right, let's see. I need to start investing, but don't know where to start. I also want to start investing for a 10-year-old son. Where do I start? Website. That's where you start. So while we're here, make sure you go to buildingbread.com, hit the free classes tab. It'll bring you, and I know it's a little bit slower since I'm like streaming live right now. And if you want to, for example, you're thinking about investing for your 10-year-old, I invest for my 2-year-old, you can hit this button right here in the middle. And I show you which accounts work best for kids, how you can start to invest for them, what makes sense, what doesn't make sense. I also teach these 2 classes every day for new investors on how you can get started. Also, you can also click the link above. I have all types of free stuff for new investors. That's what I'm here for. You can also click the link above. I'm teaching a brand new live class. I taught it today. I'm also teaching next week on the 22nd on 3 ways you can start investing today. So make sure you click that link in the description above. All right, opening a self-directed account to invest or trade on your own. Take self-directed account to make money and set aside to make your own trades. So yes, you are more than welcome to do that. a self-directed like IRA or something. People do this all the time. You can also, once you leave a job, roll over what you had in your 401k, put it in a self-directed IRA, and invest however you want. That's totally fine, totally common. Now, can you, because you had brought up the 401k earlier, can you open up your own 401k? You need to have your own business to do that and meet certain requirements. Is it a smart thing? If you have it, if you have a company and stuff, yeah, sure. But you need to check out the fees and all those things that may or may not come into that decision. All right. I think putting some in savings or aside makes sense. We don't know what to expect. You have to have something. I also like being consistent. Absolutely, because we don't know what's going to come next. Some people say this will all be over by Q3. Okay. Others say we could be socially distancing until 2022. We don't know. We absolutely don't know. But the best thing is cover all your bases. So you can invest, and if things are going the way they are, these stocks here on the board are going to do well if things stay the same. We don't know that. If they don't stay the same, guess what? I got money in savings in case they don't go the way I need it to. So either way, you're going to be okay. But that's why I was saying earlier, like, should I put all my money in Walmart? I don't know. It might be a good idea, it might not be a good idea. Again, if you're playing the field and you have your stuff spread out and you have a backup plan for every option, you're going to be okay. But if you hold your hand and put everything into one thing, you could do really, really well, or you might not do well at all. So you also want to be diversified. Do you do this webinar every night? The ones on the home page, yes, I do those every night. One that is in the description above, I'm only doing those twice. So the only 2 times I've ever done them. I don't know if I'm gonna do it again. We will see. Depends on how many people come, so on and so forth. All right. All right. Thank you guys for coming out. Make sure you share this out because there are a lot of people who are asking about this stimulus, and you got options. I want to make sure you use options and you do it in the right way. I'm also not going to shame you into buying a stock either. Do what's right for you. There's ideas on the board. You don't have to do them. I don't suggest you do them. I think you should do your research and see what fits for you. Again, I think this is the easiest thing for new investors to do, and it's the least risky on the board. You don't always want to just go for the highest number. All right, last question. Does your free class recommend the platforms to start investing for your child? The free resource does. I also did a video on platforms yesterday. So check out the video yesterday. The ones that I to be full service are the ones that you can do everything with for your kid. But inside of the one in the middle, this one here, that's going to help you as well. All right. Thank you guys for tomorrow. We try to do this Monday through Friday around 9 p.m. Central. I appreciate y'all. Come back tomorrow. We'll talk about a different topic. You guys can suggest topics too. If you want one that you think is fun to be covered and it's a serious question, we can talk about it. So suggest, hit the share button, and I will see you guys tomorrow. See ya.